In this video, we'll be taking a look at the future analysis to get prepared for the week ahead. If you love the content, please like, subscribe, and leave your thoughts in the comment section down below. And if you're interested in learning to trade Forex like professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below as well. So in this video, we're starting with the gold chart on the 1 hour time frame. And just to continue from where we stopped last week, we talked about trading within a symmetrical triangle, which is what you can see on my screen here. You see this is the higher bound of the symmetrical triangle, while this is the lower bound of the symmetrical triangle. And over here, we anticipated a price movement all the way to the lower bounds of the symmetrical triangle, where we anticipated a breakout from this trend line, right? Which what you can see here, followed by consolidation and another massive move to the upside. If you followed last week's analysis, then this should be a very good opportunity for you to have made some bucks. Right now, discussing about my bullish case scenario, I'm currently in this trade and I'm going to wait to see if we do go all the way to the top of the symmetrical triangle, which I strongly believe we will. Excuse me. Just going to get rid of this. So I'm anticipating a move into this area of value, right? And I think that's going to happen, followed by a slight consolidation and a potential bullish move to the upside. If this happens, then my bullish case scenario will be taking a position after the breakout from this consolidation and from this symmetrical triangle, with my stop loss placed underneath the consolidation at least to the breakout, and my first take profit target is going to be around this highs while I trade the rest of my positions as we go higher. This is my current bullish case scenario for gold right now, right? Mind you, I'm already on this trade because we had a breakout from this price level. So if we do get into the higher bound of this symmetrical triangle, I'm going to take out my profits, wait for that consolidation. When we get that breakout outside or beyond this symmetrical triangle, then I'm going to get into another position with my stop loss placed on underneath consolidation into the breakout, followed by TPs, of course, and trading our positions as we go higher. This is it briefly for bullish case scenario. Right now, I don't see any reason why you want to go short. The only reason why you would want to go short on gold is if we do get a clear indication, possibly maybe after getting to this area of value, we get another clear indication of a reversal, then you may want to take a quick short position. But the major short trade opportunity would be waiting for us to consolidate around the lower bounds of the symmetrical triangle, followed by a bearish breakout to the downside. This would be the best course of action for a bearish trade opportunity, in my opinion, because even if we do get rejected from this higher bounds of the symmetrical triangle, there's no way to tell if the reversal or the bounce off this area of value is simply going to be a consolidation that would lead to a higher price movement, or a consolidation or a movement that will come all the way down to these lows. So the only way to be sure exactly and to prevent yourself from getting wiped out is to wait for price to get into this lower bounds of symmetrical triangle, consolidate a little, then followed by a good breakout to the downside. If this happens, then by all means you can go short with your stop loss, with your entry around the breakout, stop loss placed above the consolidation list to the breakout, and take profit target to be placed all the way at these area values while we trade the rest of our positions as we go lower if you still have more positions. That's it briefly for a good setup this week. Excuse me. If you have questions, leave them in the comment section down below. If you disagree with me, also leave them in the comment section down below. Moving on, we'll be talking about crude oil. So crude oil, last week I went short. Fortunately, I was wiped out. My price hit my stop loss, as I explained last week. I was willing to take the risk to go short, and I also explained the possibility of price taking out this trend line, which was the best course of action for those who watched last week's video. Right now, we had a breakout from this triangle, right? Mind you, this is 1 hour time frame on crude oil, and we had a good breakout followed by a good retest and a bounce. So right now, I'm waiting for price to see. I'm waiting to see if price gets into this area value, where I'm going to watch out for a reversal in continuation of a bullish movement to the downside. Mind you, I'm still bearish on on crude oil. I don't see any reason why I have to be bullish right now, at least not until we start trading back above this area value, or until we do something like this, right? So you have this trend line, right, taking these highs and these lows. So not until we trade above this trend line, so we get a good breakout above the trend line, followed by a move to the upside, I would stay bearish. So if price gets into this area of value, then we want to watch out for a good trade opportunity to go short. That could mean, watching out for these lows, something like this, right? So a breakout from this, consolidation, something like this. So I'm going to get rid of this since this is no longer important. So we'll be watching out for something like this. So a tap into this area of value followed by a reversal, which takes out this trend line. This could be a confirmation to go short in line with the current market trend, right? This is my bearish case scenario for crude oil right now. And for a bullish case scenario, I'm simply going to wait for price to get into this area of value, maybe go above, consolidate a little around these price levels, followed by a bullish breakout to the upside. If this happens, then we are likely going to think about going long with entering maybe placed at the breakout, stop loss placed underneath the consolidation list of the breakout. First take profit target obviously is going to be here. Second one is going to be around this highs. Mind you, I don't think this is going to happen, but it's highly likely. That's why we are discussing this case scenario right now for for the bears out there. But I do strongly believe we're going to go short. So we're going to go lower for crude oil all the way to these lows, as the case may be. But that would mean, for me, what I'm watching out for would mean price getting to this area of value. We may even extend a little, followed by a move to the downside. So when I get my confirmation to go short, then that's when I'm going to go short. Most likely, if or when we take out this trend line, something like this, entry is going to be placed at the breakout, stop loss above the consolidation breakout. First take profit target is going to be around these lows, and second one is going to be placed around these lows. That's it briefly for crude oil. I hope it's clear enough. If you have questions, use the comment section down below, and if you disagree with me, also stick to your disagreement in the comment section down below and explain why. Moving on, we're talking about GBP-USD. We also discussed GBP-USD last week, waiting for price to take out this area value. Right now, we had a very good retracement, a reversal, followed by a nice pump on Friday as a result of fundamentals, right? So there was a meeting, a statement from Jerome Powell indicating some sort of dovishness. So that's the reason why we had this massive bullish move across major pairs last week Friday. So right now, area of value is still intact, and I'm just going to zoom in a little. For me, if you're trading currency pairs, the best course of action is still waiting for price to creep into this area of value, consolidate a little, and give you that bullish breakout to the upside. This is going to be the best course of action to go long on GBP-USD right now. That will mean placing your entry after the breakout. Stop loss should be placed below the consolidation lead to the breakout. First take profit target obviously is going to be around its highs, while you trade the rest of positions as we go higher, if we do go higher, right? So there's a good chance even before this happens, there's a chance before this happens we get some sort of consolidation over here, pullback, something like this, going back here, consolidation, then going back here. So the point is waiting for the best time to go long, and that will be trading above this area of resistance. So if this happens with a good consolidation before the breakout, then this would be a very good opportunity for you to go long in continuation of the overall trend on GBP-USD, like I explained last week. That's it briefly for GBP-USD. Lastly, we'll be talking about EUR USD. So EUR USD still intact based on what we discussed last week. We have a clear trend line. So 1, 2, 3 taps now, and I'm expecting some more consolidation. So the best course of action, in my opinion, would still be waiting for that consolidation followed by a good breakout to the upside. If this happens, then you want to go long after the consolidation. Stop loss will be placed underneath the consolidation list of the breakout. First take profit target can be around these highs, and you trade the rest of positions as we go higher, right? EUR USD bullish. You can see the clear structure, bullish move, huge consolidation, nice swings. Now, if we do get another consolidation here leading to a breakout, so a breakout from this trend line would be a good opportunity to go long, as I explained last week. So everything's still intact. Don't get fooled by this massive bullish candle over here, because this could easily be retraced. So this movement could easily be retraced all the way back down to this price level before we resume normal market reading, right? And no matter when that happens, when we take out this trend line, then you should be ready to go short, as the case may be, right? So that's it briefly for this week's analysis. If you love the content, please like, subscribe, leave your thoughts in the comment section down below. If you're interested in learning to trade Forex like a professional, check out our complete Forex trading course on Udemy. I have the link attached in the description below. That's it from me guys this week. See you next week.